Welcome back to another video. Today we're going to take a look at the US oil as well as the gold. I'm also going to look at the current situation that's happening between Russia as well as Ukraine. Now, firstly, we're going to start with this article here by CNBC on the 15th. It says that Russia says it's begun partial troops pullback from Ukraine border. NATO still urges caution. Now it says here Moscow is beginning to return troops at the Ukraine border to their bases. The Russian government has announced. Now, if you've been following the news this week, you will know that there was um, people from the US administration that came out and said that the war is going to happen. Then the president of the Ukraine came out and said, no, we're not going to fight anymore. And then Biden came out yesterday and said, no, there is a very high possibility that this could happen as well. Now, Russia says that it began to pull back parcel of their troops from the Ukraine border. It says here that senior emergency markets sovereign strategist at Blu-ray Asset Management said the move could signal a bigger defeat for Putin. Now, listen to this, ladies and gentlemen. On the 15th of February, it was confirmed that Russia began to move their troops from the border. This morning you wake up and it says that NATO says Russia is now increasing troop numbers at the Ukraine border and calls for talks. It says now that NATO has accused Russia for increasing troop count at the Ukraine border the day after Moscow claimed, which it said here, Moscow is beginning to return troops and now claimed that it had begun withdrawing some of its military units. NATO chief Jens Stoltenberg said Wednesday it appears that Russia continues their military build-up at the border. UK Prime Minister Boris Johnson said Wednesday that Kremlin is sending West mixed signals. Now, if you've never ever seen market manipulation at its best, this was a good week for that as well because the markets were jumping up and down based off speculation. And if you've never heard the saying, ladies and gentlemen, it goes like this: buy the rumor and sell the news. Now, there is no clear confirmation based of what's going to happen now because one guy is saying this, the next one saying that, then the market then jumps, then the market pulls back, then the market jumps, and then the market pulls back. Now, we're going to take a look at the US oil as well as the gold. So I'm going to do a detailed breakdown from a technical perspective and give you the best possibility that we could be looking to take a trade on both of these uh, trading instruments as well. Now starting here with the gold. Now on the monthly time frame, the market printed this massive impulse, printed that correction. Now we are still waiting for that massive correction on gold, which we could potentially see happening now. Also, if you take your Fibonacci from the low to the high of that massive impulse, the market tested and rejected the 78.6, which is the last Fibonacci level, giving us a overall massive target there of 2181 as well. Now, if you drop down on the weekly time frame, what do you see? Now, from a weekly perspective, firstly, this market had broken above a very important structure over here. Now, this area over here acted as a very strong level of resistance. The market broke above that level, created an equal high, came back and tested that level. Now, also, if you take your Fibonacci from the low to the high of the impulse, you can see over there the market had tested and rejected the 0.382, give us a confirmation that the bullish momentum is quite expected to be strong for the gold. Now, if you drop down on the daily time frame where there is even better structure to read, now you can see here how the market had broken above this most recent structure. Firstly, this level over here acted as a level of resistance. The market broke above that, came to test it as support. Because the market printed that equal high, we obviously expected that move to the downside before the continuation to the upside as well. Now, the best way to approach the situation over here. Now, this is directly 100% directly taken from a fundamental perspective. If Ukraine does if Russia does invade the Ukraine, and this move over here, ladies and gentlemen, is 100% expected. If nothing happens, then you can expect gold to give up all its gains and then continue to the downside. Why? Because why? the US interest rate hikes is expected to pull through. That's going to increase the strength for the US dollar, and by definition or by default weaken the gold, because we know there's a negative correlation between the gold and the US dollar as well. Now, if you hear any rockets go off in Ukraine, I would suggest you come in here and you keep buying this. But at the moment, there's just a lot of speculation going around, and as traders, we have to be reactive and not predictive. Now, if you go and look at the the previous COT report. Now the COT data tells us what the big banks and hedge funds are doing in the market. This was the report for the 1st of February, and we can see how hedge funds came in. They closed minus 37,421 longs. They then closed plus 10,588 of their selling positions. But if you look at the most recent report over here, we can see how hedge funds came in and they added plus 3,565 longs, and they closed all of that selling positions that they added the previous week. We can also see how the overall net positions is sitting at 279,559 long buying positions, and the shorts are sitting at only 92,853, which giving us a clear confirmation that they are quite interested in continuing this move to the upside. But the only thing that is the driving factor behind this force is a situation of uncertainty, and at the moment there is no concrete evidence, because one day Russia is pulling their troops back and the next day they are moving them closer to the border. Now, that is a problem, and that is a problem for all of us. Now, the best way we are going to approach the situation is to monitor the fundamental data. And until you hear a bomb go off in Ukraine, the first bomb to go off in Ukraine, you're going to come to this gold and you're going to buy the gold with everything that you have, and you're going to ride this wave, because a war doesn't last 1 day or 2 days. That thing will continue and continue and continue and continue, and the more it continues, the more it's going to drive gold to the upside. Now, if all else fail and none of this takes place, you can definitely once again expect gold to give up its gains. Because why? Because why? Investors will not be interested in gold as a safe haven, because there's nothing to worry about, and the interest rate hikes that are looming for March for US citizens due to high inflation will come and kick gold's ass, and gold will be forced to give up all of that gains that it has gathered over fake fundamental data that was pushed up and down by people that are in high positions there as well. The next thing we are going to do is we're going to look at culprit number 2, which is the US oil. Now, the US oil, the reason we saw this massive buy in the US oil was purely because, like I said before, that Russia is one of the world's largest oil producers, and because there was fears that if this war does take place, Putin were going to cut oil supplies to the world, meaning that there will be higher demand for the US oil because of the supplies that will be cut by Russia or by Putin himself. So obviously, if you think about it, back in the days during the 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 coronavirus, when people were not allowed to sell cigarettes at that time, what happened was, um, so the supplies were cut, meaning that anybody that was selling cigarettes, the demand for that cigarettes was quite high, and people were able to sell you these weird name cigarettes for a price, and you couldn't refuse it because the demand for it was quite high, because the supply was low, because supplies were cut. So if Putin cuts supplies, we can expect the prices of the US oil to go and hit that $100 barrel, like JP Morgan has forecasted every, like he just forecast, like they just forecast it every time, and then it just never happens. But in any case, maybe he's right, well, maybe they're right this time. In any case, so if you look here at the situation that we got on the US oil over here, so the US oil currently broke above this very strong structural area over here. Now this level here acted as a level of support. Support got broken. We had this massive coronavirus come through, taking the oil to zero, and then the market started pulling back. I remember when this move happened, you couldn't even buy oil because your broker didn't allow you to and unless you had a lot of money because the spreads were so high. The market broke above that level of resistance, and all of this resistance is once again turned support. The market had also traded at its highest level since August 2014 there as well, and all of this is purely based off speculation in the current market. Now on the weekly time frame, what do we have? Now this is a good example of where your technical analysis is no match for fundamental data. You can see over here this market printed this massive impulse. Okay, this massive impulse. Now I remember speaking about oil when the market was sitting at this level as well, explaining all of the reasons why you should be looking to buy this market. Now if you are in the group that I've got on Telegram, you'll see what I said. I said that it's the best place to look for a good buying opportunity, uh, oil as early as possible as well. Now you can see how the market had printed this massive impulse, and the market is only going to correct itself once, and only once the news there's more certainty in the news for the pullback on there as well. Now, on the daily time frame, what do we have? Now, from a daily perspective, we can see how the market printed this strong level of resistance. The market broke above that, came to retest it. Market also printed this massive impulse in the correction. Now, if you take a Fibonacci there from the low to the high, you can see how the market tested and rejected the 61.8, aka the golden ratio. Now, again, we're gonna use this the same way that we might be trading gold. So there's a good opportunity for the market to skyrocket from where it is over here. Okay, and like I said, if you hear a missile goes off in the Ukraine, then you go to oil and you buy it quite aggressively. But if nothing happens, then this market is forced to give up the gains. In doing so, the market will then print this head and shoulders, which is considered a bearish pattern from a technical perspective as well. Now, if you look at the order flow data, so the commitment of traders. Now you can see based on the last report over here, or the report for the 1st of February, hedge funds came in, closed longs, they also closed short positions, and the most recent report we can see they still closed longs and they closed shorts again, which tells us that even these guys are uncertain about what's going to happen. But from where we are sitting now, the US oil and the gold is 100% dependent on what is going to happen in Ukraine, between Ukraine and Russia. So um, if you want to take a trade on these things, then you can definitely take this opportunity when there is more certainty in the market, when the news comes out. So that's the update for you guys. Very detailed breakdown. And if you enjoyed the video, please smash the like button for the YouTube algorithm. And as always, cheers for ears.